The origin of CBDC, why it came. First of all, this came as a reaction to all the cryptocurrencies that is floating in the market. Okay? Cryptos came in reaction to failure of banks. Now, in reaction to cryptos, and since they were trying to take over all the market from government, so they came up with this CBDC so that they can kill all the cryptos. That's the basic purpose. Now, what happens here? But you know, our economy is, global economy is always political economy. It is not that if any country will like to do anything, they can just go ahead with it and it will be done. No, there is a political play in that. So, when you are seeing different countries coming up with different cryptocurrencies, they have very different motives. When you are seeing European countries, they are working on a different parameter. All these CBDCs are basically payment systems. Okay, they are not trying to substitute the fiat with CBDCs. No, because they know that in case of any eventuality, there will be a run on central bank and central bank will get totally destroyed. When there will be a demand run from public. Now, in contrast to this European version, look at the Chinese version now. Okay, what they are trying to do. In that case, CBDC is a fiat. It is a conversion of fiat paper currency to digital currency, digital yuan. That's why they call it digital yuan. So it becomes digital currency electronic payment, DCEP. So it is serving two purposes. And you have to again understand in terms of the ambition of China to take over global economy and fight with US and be the real competitor in the market. So what happened? First, they attacked Alibaba and all, so they shunted them. Now, it is digital yuan which is going to be all in all in Chinese market, local market. Alibaba is finished. Okay, so you know, for the first time they have come out with 2 point something B losses. Their IPO is also finished. So that was the purpose. Because they call democracy, open society, this, that, but it is party supremacy. So it moves with that. So that is the political agenda. Now, when it is working, how they specify, okay, it is for digital yuan, for local people, for all purchasing, and for tourists. And for tourists who comes in there. And it can be given to them also. Now, what is the purpose of that? When they go out, again, they will try to maintain the balance in yuan. Okay? They are trying to lure more followers to that. Then what they did? They joined Hong Kong and Thailand in their Project Rock project and made it a four-way with the UAE joining in. So it becomes the multiple CBDC bridge. So it is the same digital yuan again coming out. Now here is the main story of that and answer to your. It is a political play. So whenever you will find CBDC as a substitute of fiat, it is a global play. When it is a substitute for settlement, it is normal. It is a payment system. Okay, so in place of paper, it is digital. Now it can travel faster and to more places. With digital infrastructure, it will move faster. So what happens with these four countries, if you see their trade volume, it is not much. But the volume, trade volume is bigger, but number of trades are very small. So those will get settled there. Now, in case of Iran, you saw they were under sanction, but China was working with them. Venezuela under sanction, China working with them. So what happens? this digital yuan can travel to those places. They can also bamboozle all those sanctioned areas. So they can spread the influence of digital yuan to those countries. And that can become, even if you see it right now, after dollar, then it is euro and yuan. That is the settlement currency at number 3. It is itself the yuan, which is moving now, floating. Earlier it was in paper form, in your wallet, moving in your pocket. Now it is moving in your wallet. And it can never float against its own currency, because if that you are doing, you are trying to create a contradiction in your monetary system itself. See, when you are having a fintech revolution in your economy and country, and the whole nature of your monetary system is changing. So, of course, and other countries are also shifting to digital currencies and all. You have to move with time, and you have to have your own digital currency so that you can tackle the settlements. Because global trade is all the time happening. So from here, something is going, you have to make the payment, you have to receive the payment, all those things will keep on happening. So you have to have your own same kind of solution which can match with other countries. So what happens here now, in case of trade settlements, in a fintech environment, we have to work closely with CBDC so that it can be a uniform agenda and a uniform system all over. That means all the public sector, private sector will be working in tandem in all those areas. All the monetary policy, fiscal policy will align with the other countries' monetary policy, fiscal policy. The sting in the tail will come later on. Yes, that is how it works. Because when you are talking of settlements, how it will work in trade and how it will do the settlements, this is how it works. But that is what I am coming to. That is what I told you, that sting in the tail is coming at the end. So the sting in the tail is, you have multiple currencies from CBDCs from different countries. Now, how are you going to assign value to them? So what you will have, you will try to have some common ground wherein you can weigh in, okay, these Bahrain, okay, your CBDC will have this much. Bahamas, your CBDC will have this value. Okay, how are you ascertaining the value? Since in fintech now the biggest concept is stable coins. Stable coins, that okay, they are okay. Yeah, so stable coins vis-a-vis US dollars. That is the dominant currency, so a stable coin vis-a-vis dollars. If you remember, Thailand did not approve of Thai baht as stable currency. They said no. Even if it is our national currency, we are not going to accept it as stable coin. So it has to be dollar. So the same thing will happen here. That you have to have one universally acceptable token, CBDC, which will be dominating the arena. And again, I come back to China. Okay? Because I had given you just two reasons that, okay, the domestic and international, they are getting connected, multiple CBDC bridge that is being created with all these 4 countries. And Hong Kong is itself jockeying to become the offshore center for offshore yuan. Then I think it should be around 120, 130 countries with which China has a favorable balance of trade. So what will happen? Those countries will have to follow China. So they will have to follow digital yuan. Then what will happen? With those countries, digital yuan will become the stable coin for them. Now you see the reach of Chinese economy and Chinese currency. and how they are going to stand opposite to US dollar. So that is the politics, and that is how CBDC in settlements will create the problem. Positive aspect of CBDC will be helping in opening your domestic economy and creating more inclusion. That is the biggest thing that you can do. See, in developing economies, we have to always remember that CBDC as a retail and as a wholesale. When it is acting as wholesale, you are talking of developed economies. And that is why we talk of settlement and this and that. But when it is in retail, it is creating local economic development by way of financial inclusion. So that aspect is very important. What happens in developing economies, that there is a lot of corruption. And the fund transfer which is meant for say the poor people, rural areas, agricultural areas, remote areas, money cannot reach there, banks are not there, so they are fully unbanked. And if there is any bank, their illiteracy is there, so there are intermediaries which are again fleecing them. Now, with this type of arrangement like CBDC as a retail currency, what happens? You are totally opening the economy. And by way of digital wallets, by way of prepaid cards, and even like China had this, just you connect both the phones and the data will get transferred. So money will get transferred from one party to another party. So all those things become available to expand your internal economy. So money circulation will be up. Now with that money circulation getting up, what you are going to create here? You are creating more demand. When you are creating more demand, your industrial production expands to meet those demands. And that becomes the basis for the development of the economy. And that they will be slower in their approach, rather they have agenda for universal appeal for all people. They don't have the political agenda. So that's why yuan, you will see how fast it is moving. But in Sweden, now they are talking that it will take at least 5 days to come out with the CBDCs, right? So, you see what happened, if you see how Sweden had started working. Sweden started working on 2-tier of CBDC. So we call it is not the direct mode that, okay, central bank is responsible for issuing, distributing and everything. No, it is hybrid model. So what is hybrid model which Sweden is following in the study report? The central bank is there, Riksbank, and then there are intermediaries. Now intermediaries are who? Banks, financial institutions, payment gateways, all those things. So now these are the two entities. Central bank is issuing the tokens. They are responsible for repayment of the CBDCs. But how it is getting implemented? It is getting implemented through banks, the intermediaries. So they are doing all the KYC because they are connected to the customers. They are holding all the records. And all the transactional data is with them, banking data is with them, client data is with them, central bank does not have anything. From here, the whole problem of Sweden starts because they, first of all, they did not do the testing on a wide scale in real environment. They have done all those testing in a stimulated environment with stimulated entities, simulated entities and all that. So the realistic appeal is missing there. In the second round, they have to work with all these banks, financial institutions, even though the arrangement, the infrastructure for CBDC is verified in the first report. But they have been working with the simulated agents and agencies. So they cannot measure the scalability of their success or their CBDC. They have to still work with the real entities to see the real scope and the reach. And then there are, of course, with CBDC, the way they are trying to project it, even the bankers are agitating against it. So they are not very happy that why it should be like this, that anyone can transfer money for CBDCs. So you are totally de-intermediating the banks. They will be totally empty. Then, Europeans, they are also very, very particular about customer secrecy and banking secrecy and data and all that. So in light of GDPR and PSD2 and all that, they have to align with these regulations as well, because they are part of European Union. So what happens, since all the KYC, AML, all data is with the intermediaries, central bank has nothing. Now the question is, what data should be considered as banking data and what should be the customer data? So where is the boundary? So all these are very ethical issues and they need time to resolve it. So that's why they are trying to be slow and fully undertaking all research, study, and then move with it, so that they don't fail and it starts and there are a lot of ethical hangamas going on and they have to backtrack. So that's what is like that. So we have not taken a single dollar from market or from any VC or otherwise, because we have a very development-centric agenda for our digital banking and our fintech products. So like we have neobanks getting launched in India, which is called BranchX. Then I am also partnering EcoBank in Africa. Then I am also launching smart agriculture in India, in Africa, in Ghana to be precise. And then I'm also in talks, advanced talks with government of Philippines for that project. So my agenda is totally different. So I did not want to have the interference of VCs in name of funding to divert me from my agenda and make it a profit-centric project. So my saving through my life. So on my so everything I put in my projects, because I know the beauty of them and I know they are really going to break the ice for development and all that. So there are a lot of different agendas there, because it is not I'm trying to create a new theory of development, that okay, we have seen development coming from top mostly, trickle down theory with all sorts of donations, subsidies, grants, loans, this, that. So now I'm working on development from below, how you have to create. Forget about cash help and cash economy in rural areas and landlocked areas to regenerate that particular area. You need to create the machinery to generate capital and money, so that it can sustain itself and further create money and capital. And there I am talking about like rural exchange, something like stock exchange for rural areas, and how agricultural commodities will play with those rural exchanges. And so a lot of those type of things I have developed. No, all over. Of course, India, States, Europe. Then for some time I was working with some Brazilian entity. Then Eastern Europe, I was so everywhere. A lot of things going on. Even now I'm giving lectures to different management colleges, institutions, mentoring students and all that. So my agenda is totally different. I don't even have my personal wallet, not a single penny investment in any cryptos. So I'm dead against all that. You see what is happening with Elon Musk and all that. Today, Bitcoin, when he had to square off his position of Tesla, he pushed Bitcoin. With that money, he squared off Tesla, all the losses of Tesla. But then he realized that he cannot push for Bitcoin further and he cannot have that much of margin. So he started pushing Dogecoin. Okay, it will have larger margin, so he will have larger money to his coffer. So that is what he is trying to do. So when we had those days with insider trading and all that, and we used to punish it, right? We punish insider trading and all that. So here it is blatant incident how market is getting manipulated and how people are manipulating. So crypto market and crypto economy is very, very dicey that way. So in banking parlance, I will always say one has to be very, very careful about it. But you see all these big banks, how they have jumped the bandwagon of crypto. Why they are trying to do, but you will see one thing. I was also like in 2018, I had circulated in one of the conferences in New York that how fintech cash-based normal banking and how crypto banking both can be simultaneously created and you can work with both the things. So those things now they are becoming reality. I had created a Matthew token, gold-backed Matthew token, and I had assigned a value of $10 to that. So now it is virtually, and it was only for settlement in my banking system. Okay, only for settlement, not for trading. So you could not have gambled with that. So now we talk of stable coins. So I think conceptually everything that I created was very, very good, and it was to the dot. But only thing is my agenda is totally different. So development. So I have to go to those developing economies wherein fintech can create wonders. See, even in developed economies, developed centers, fintech was not available because main banks were against them, right? And even if banks did start some sort of neobank project, it failed because they did not put in their mind and interest to that. But nowadays, I think you have better customers and better people who can really scale the project to a good height very fast. That is in developing economies. Because they don't have any legacy baggage on them. So they can just jump to the main fintech product directly. So that's how I created something like EST Land, EST Agriculture, EST AGR, EST Ag. So all those things, and I'm launching in those countries, Africa, India, of course Philippines, as I told you, Latin America, because those are the areas where people are ready to adopt and accept. Because in developed economy, first question is, what is my rate of return? What is the return I'm going to get on my money? What will be the profitability? So the moment you start with these questions, then you have a very, very different thinking about the whole project and the working. So that does not work with me. So probably that's why I go to those areas. I did not talk about all those basic banking theory, fractional reserve banking and theory, how banking is working, how digital banks and fintech will react to all those things. So many ifs and buts. So, okay. There is solution for everything, no? So, earlier system was also developed by us. This system also is getting developed by us, and in future also it will be developed by us. So we keep all the margins for everything. So let us not have this view that, after this what? No. We will always be there, and there are always going to be some loopholes. And see, technical advancement keeps on going every now and then. all through, even in nature you will find every day new mutations are going on. So even pandemic had so many types of variants and mutations. So everything mutates and variants are coming in. So even in our fintech products, these things are good. When ICO age was there, like ICOs were there and people were having one vision and people were pouring out money, and so many projects never saw the light. Some projects came to light but failed, and some projects were really genuine. So the same way things will happen like that. So no one had imagined that we will enter the age of CBDCs, DeFis and all those. So that's the progress.